Hey folks, Dan Frio here, the Mortgage Update. Today is March 18th, 2020. I'm sorry, I'm real close to the video right now. Don't mean to scare you with my face down at the bottom, but I'm trying to do this for audio purposes. I left my mic, I created a studio in my office, and I took my microphone there and everything, so I apologize. I know my audio has been terrible lately, and I'm working on fixing that. But let's go, what happened today? The market got crushed. I mean, right here. Let me just put this in perspective, but I got some ideas for you, and I'm going to go over those in a minute. But basically what happened today is the Fed came out and said there's going to be over $1 trillion stimulus package. How do they fund that? Well, they start buying Treasury, or start selling Treasuries. So there's going to be a glut, just a glut of Treasuries in the market. And that's pushing yields higher and prices down, because there's well over supply right now. So it's going to push the prices way down because people don't want it. So to get an equilibrium, as the prices go down, the yields go up. And then once the yields hit a point where people like it, they'll start to buy it. Well, that's put pressure on mortgage-backed securities as well. I've never in my lifetime seen a 200-point move in this market. Again, unprecedented times. Basically, that's what's going on. There's a pandemic going on. There's an epidemic. There's everybody jumping on the bandwagon. It's basically a self-fulfilled prophecy, as people, they just keep selling and selling and selling, and all the media is just hyping this so bad, and it might be well deserved. I don't know, so I'm not going to go on that bandwagon. But I think the media's viewership is so good right now that they're jumping on it, and they kind of love the attention. We'll put it that way. I'll leave it at that, because I'm not trying to disrespect anybody, especially if you come down with the virus. I just want to give you the facts behind everything. So there's a glut of treasuries getting out there right now because of the stimulus package. It should be signed today or tonight. But what's happening? I was just watching a conference call with Hormel Foods, their CEO. And he said in China, they're getting back to normalcy. So think about that. That's the first place that this thing hit. And it's been 2 months, and now they're getting back to normalcy. He said their factories are getting back to normal. People are back on the streets, and things are kind of getting better. So think of when the flu season hits here, around the holidays. We have that for 2-3 months. Schools shut down sometimes, and this and that. It's never been this hyped. But we never had, a society that's been this inundated with media. So let's put it in perspective. If China's already starting to come back to normalcy, and this is a call with Hormel Foods CEO with their factories in China. He's just giving the facts on what's going on. So, yes, the Fed's jumping in. Everybody's doing all this to curtail this thing. So let's sit back and say, okay, let's watch the markets just skyrocket up and down and whatever. But let's forward fast maybe 60, 90 days when the virus hopefully subsides and starts to move through the system. This is going to push us into some tough times. The Fed's going to have everything out there. And it's going to drive down. I'm predicting, if you missed out on rates right now, rates still are fantastic. And I want to talk to you about, some things people don't think about when they're refinancing. I'm going to get that at in a minute. But I think everything's going to start to stabilize. So let's go over what happened in the market today. And I mean, it was a bloodbath. We opened the day, down a little bit, but then as the day progressed, it just got worse and worse and worse and worse and worse. But we're basically, look at the level right here. Let me draw a line. It's not the end of the world. Let's just go across here. So basically, all right, I'll say that's probably about level. So basically, we were at this levels in February. So a month ago, we were at this level. You missed this, but I still think we're going to be up in this level when things subside. I was talking to our CEO and a bunch of hedge fund people today, and they said there's a lot of fluff built into rates right now because of the volatility. Earlier, I posted an alert. You go to, a lot of people go to bankrate.com, and they're always telling me, I went to bankrate.com and the rates were 2%. Well, go there today and you're going to see my rate. I just quoted a couple quotes just now, and I'll just give you the rate. And there was no points, basically just our standard lender fees. And I was still at, in the about the mid range of 3% on 30-year fixed. So, that being said, rates are still fantastic. Okay, so what I think is going to happen is we're going to return to normalcy here in a bit. Hopefully, you took some of your money off the table, like I advised a couple months ago. But if you didn't, I see the bottom kind of getting here. The Dow Jones futures right now are up 400. Unfortunately, that doesn't mean squat because you can see the day's volatility are huge. So let's just surmise right now. There's really not any economic data that's coming out that's going to affect anything. It's just the virus. So my assumption is 30 to 60 days, 90 days out, everything's going to start to settle down, and we're going to come back to rates that are phenomenal for everybody. So what I suggest is get started on things. And even like I said, even at today's rates, let's say you lock in today at 3.875. If rates go back to 2.875, do it again, because basically our lender fees are very, very, very cheap. Let me give you a little, an idea. Just put it that way. You might want to look to refinance. When you're looking to refinance, what most people do is they call me and they say, Dan, I want to refinance. I say, why? I want to get a lower rate. Why? I want my payments to go lower. Okay, that makes sense. But then I come back and say, you know what, are you looking for a lower payment, or is your payment comfortable with you? Some say yes, some say no. If they say yes, I always say, let's try to restructure your term in correlation to your payment. Maybe we can cut off 5, 6, 7, 8 years. So that's an idea. The other idea I have for you, and most people don't realize this, is when you refinance, you're going to skip, in all cases, you're going to skip a month's payment. How I try to structure my loans is so you can skip 2 payments. So if you get started now, for example, it's taken us about 3 to 4 weeks to close a loan. Some companies, you're out 3 to 4 months. So what we can do is structure your loan to close the beginning or middle of next month. You would skip next month, so that is April. You would skip May. Your first payment would be due in June. So you would skip 2 months. That for you might be able to put food on your table. Okay, so hopefully not, but that's an idea. So let's talk about or work on getting you refinanced and skipping 2 months mortgage payments. Now the next thing is, a lot of people have a lot of debt, and you're probably going to be living on your credit card for the next couple of weeks, especially if you're in the services business. So why don't we look at consolidating that debt and lumping everything into one? I'm not trying to, you have the debt already. I'm not trying to add to your debt. I'm trying to structure it in the most effective way for you. So we take your debt at 10%, 12%, 28% interest rate credit cards, lump them into a 4%, say, mortgage. Skip 2 months mortgage payments. Let's say your mortgage payment now is $2,000. Well, it goes to $2,200. But we just paid off $30,000 in credit cards that was costing you $1,500 a month. So your mortgage payment goes up $200 a month, but we just saved you $1,500 in other credit card payments, or say $1,000. So you're still $800 net a month in the good. That's an idea for you. I just thought I'd throw that out there. So I just wanted to give you a report. I did a midday alert, kind of telling you what's going on. I'm not locking in anybody right now. I still feel that this basically everybody's knee-jerk reactions, but it's not the end of the world. I mean, you didn't lock in here. A lot of my clients have. God bless you. We timed that perfect. A lot of them we locked in right in here. I think we locked the other day. I think I started locking in a couple here, and you were still in good shape. I'm not locking anybody right here at the time unless they're closing in the next week or two. They're buying a home and we didn't lock them, but I'm pretty sure I locked everybody up in this area. So that's my idea of the day. Look at refinancing, drive down that rate, skip 2 months mortgage payments. Let's consolidate some bills and put you in a much better financial position. Again, my name is Dan Frio. I do the mortgage update every day on YouTube. You can hear me on WYLL radio in Chicago weeknights at 7:30 to 8 p.m. You can hear me Saturday mornings on WIND radio in Chicago from 7 a.m. to 8 a.m. in the morning. The best way to get me right now is shoot me an email at Danny, D-A-N-N-Y, .frio, that's F-R-I-O, at preferredrate.com. One of two things I ask people to do. Send me your loan estimate. If you're working with a lender right now, let's see what we can do. We can probably beat them in rate and or fees and or both. Or if you're looking to refinance your current mortgage, send me your mortgage statement. And in the email that you send me, just give me an idea of what I need the whole mortgage statement so I can get your address and everything so I can figure out the value of the home. But give me an idea what you think your credit score is, because that's a big piece of this puzzle. So that's a way to get me. Probably the best way and quickest way to get me is give us a call. 844-775-LOAN. That's 844-775-5626. And I'll walk you through the scenarios, the best options for you. I'll leave it up to you. No high pressure sales. It's not like, hey, you got to sign today, you're going to lose this out. It's up to you. I'm just here to help you, and I'll be that instrument for your assistance. So that's it for now. I'm not going to go through any technicals on what's coming up in the markets. What's is there inflation numbers coming out, employment numbers coming out? All that's irrelevant at this point. I just want to keep you up to date on what's going on with rates and just give you some ideas on things you might want to look to do. So God bless. If I can be of any help, please reach out. Give me a thumbs up if you would. That helps me. Please, down below, click the bell. Make sure you get an alert when I post these things. Share the video. There's probably millions of people out there we can help, and a lot of people are taking advantage of in this market, and I'd love to help. So God bless. See you tomorrow, same time, same place. Take care. Bye bye.